bulls, Shinzo Abe's weekend victory in the upper house elections signals that the fuel line is unblocked and the Abenomics rocket will now continue its surge for the stratosphere. Bears are convinced the whole economic moonshot remains on the launch pad, only now with just a bit more rust. The latter group may have a point, even accounting for the huge January to March exodus of foreign capital that treated Japan as an ATM. Stock valuations are grim. Despite all the fanfare surrounding better corporate governance and a focus on shareholder value, the ratio of Tokyo first section companies trading below book value has just climbed back to 55%. Only a little further, and it will be back where it was in 2012, as if Abenomics had never happened at all. But scratch behind that ratio, and there may be some good news on the buyback front. In the first half of 2016, straight corporate debt issuance was around 15% higher than the same period a year earlier. Also in 2016, first half follow-on issuance of new shares by listed companies was 67% lower than in the first half of 2015. This is what the Abe push for better corporate governance has quietly achieved. Managements have spent the past 3 years being righteously hammered by investors over their cost of equity, and the message has finally sunk in. As interest rates in Japan have hit rock bottom, CFOs who once thought of the cost of equity in terms of what left their pockets are now forced to measure it as an opportunity cost against the ultra-low cost of debt. With the TOPIX where it is now, down nearly 19% since January, many companies may take this as a perfect time to retire some equity. Many already have. 2015 was a record year for share buybacks in Japan, with 5 trillion yen carried out. By the end of this June, Japanese companies had already announced over 4 trillion worth. Conservative estimates are that by the end of 2016, buybacks could hit 7 trillion yen, but the spree could turn even more frenzied if Japanese banks start charging negative rates on big corporate deposits. With an opportunity cost on holding cash, buybacks are even more appealing. In this one area at least, Abenomics has hit escape velocity.